Anmol here from Paris and Baz Real Estate. We are bringing to you another episode of Paris and Baz Cast, our weekly episodes where we bring to you new guest speakers every week to talk about different aspects of property management, sales and finance and how they may impact your decisions. Today we are joined by Louise Mills from Deposit Assured to talk about deposit bonds. Hello, Louise.
Hello, Louise. Thank you for joining us today.
Thank you both for having me. I'm excited to be here.
Absolutely. So deposit bonds, I've heard a lot about them, and it's something that I think a number of our clients may not know exactly how that works. We've got some questions or unclarity about which situations it would apply in.
Yep.
So let's get that started. Do you want to ask the first question?
Yeah, just a bit of introduction about yourself.
Yeah, sure.
Deposit Assured.
Excellent, thank you. So my name is Louise. I have been working in the finance game for around 15 years now.
Yeah.
Recently joined Deposit Assured. I say recently, but it was about 9 months ago.
Yeah.
And Deposit Assured are one of the providers of deposit bonds to finance mortgage brokers, conveyancers, solicitors, and also real estates. And really proud to be underwritten by QBE. So QBE is a really well recognised insurer and the only Australian-based provider of deposit bonds. So a really strong product.
So it's a big backing you got there.
Yeah, absolutely.
So what is a deposit bond?
Yeah, so a deposit bond, put simply, is basically an IOU. So it's an insurance policy that the purchaser will use to give to the vendor at exchange to say that I'm good for the funds, but they'll be available at settlement. So it's when a customer doesn't have that immediate or convenient access to their cash deposit.
Yeah. So how is a deposit bond used?
Yeah, so it's used to exchange, and it acts the same way as what a cash deposit would do. So instead of putting down that 10% cash or check, they purchase a deposit bond to secure the property and confirm that they'll pay the 100% cost, plus costs at settlement.
Right. Okay. And when we use a deposit bond, is there anything to be aware of?
Yes, there is. So deposit bonds are readily used in purchases and used as that solution to that customer's problem. But it's always important for a purchaser to check with the vendor to make sure that they'll accept a deposit bond in exchange instead of putting down that actual cash deposit. So that's something that's really important for the purchaser to keep in mind, and that's usually a conversation had by the legal representatives just to confirm all of that. The other thing to really be aware of is that a deposit bond isn't a get out of jail free card. So just because you're using the insurance policy to exchange instead of putting down the cash, if for whatever reason the settlement doesn't take place or can't complete, the vendor can then claim on the insurance policy to the percentage, usually 10%, that they would have been entitled to if the customer had put down their cash deposit. So the main benefit for a purchaser is they're deferring their deposit, or deferring paying their cash deposit until settlement. So they're paying that 100% at settlement.
Right, and it's normally used in off the plan as well. It's very common to use in off the plan.
Yeah, so it has been very common in that situation, and that's mainly because it's more convenient for a customer to use a bond then. So they pay a small fee to exchange with a deposit bond rather than using their cash, where their cash could be working harder for them somewhere else. And in that situation, they won't need to act, or all they'll need to do at settlement is pay the 100% plus cost.
And what would be a typical scenario that would be used?
Yeah, so the most typical scenario that we see is a buy and sell situation. So where it's going to be a simultaneous settlement and the customers are ultimately in a chain. So they've sold their existing property, and so all of the equity and cash is tied up in that sale and it won't be available until it settles. But they still want to purchase a new property, so they just don't have that immediate access to the cash to put down to exchange. So in that situation, a deposit bond will solve that problem for the customer because they can still continue with the purchase and ultimately it will be most likely a simultaneous settlement. Exactly. Sorry. So that's the most common scenario that we see. But we also very recently, probably in the last month, have seen an increase in first home buyers using family guarantee loans, where often it's 100% of the lend when you take into consideration the first home buyers plus the family guarantee portion. And in those situations, they don't really have access to that cash deposit, and a deposit bond in that situation solves the problem to enable them to put down a bond instead of the deposit.
So one of the questions that we were asked is that if a purchaser has a term deposit that is due to expire in a couple of weeks, couple of months' time, does the deposit bond help in that instance?
So there's two main ways that a customer can qualify for a deposit bond. The first is if we can see unconditional funds to complete at settlement. Usually, in the most usual circumstances of that is when they've got a formal approval or a conditional approval subject to valuation, so the finance approval, or an executed contract of sale for the sell property. So for us, that's what we call a finance-backed deposit bond, and it's 9 out of 10 basically that we do come under that finance-backed. If they're not yet, if they don't have the proof of unconditional funds to complete, the other situation we would look at is if they had equity in an existing property, or even guarantors that have equity in an existing property, and then we'll do an income and equity assessment to make sure they meet our net worth coverage requirements.
And in terms of auctions, how can it be used? For that?
So with auction clearance rates obviously on the increase, we are generally getting a lot of inquiry around auction bonds at the moment, and it's used exactly the same way. The only difference would be that we would effectively issue a bond that's blank up to a certain amount, and that certain amount would be 10% of whatever their maximum bid amount is going to be. And then if the customers are successful at auction, they simply complete it on the day to hand it over as their deposit to secure the property. If they're unsuccessful at that first auction, it can be used at future auctions or even in a private treaty situation if it moves to that kind of sale.
So that's when we pre-qualify the customer to see what limit they can go to?
So they usually come through under a finance-backed, so a conditionally approved subject to contract of sale and valuation, and that for us is a finance-backed deposit bond.
And what's the turnaround time? Like how quickly can it be done?
So we have a concierge service. So for your finance-backed deposit bonds, it will take you 30 seconds to refer through to our concierge team. Within 15 minutes, we can give an approval or a request for more information. Our concierge team will then put that application together and email it to the customer to check and DocuSign. Customers DocuSign and make the payment, and the bond's released within the hour. So all up, it could take as little as 2 hours.
Wow. And what are the documents again, so to be able to provide?
For finance-backed, we need the proof of unconditional funds, which is usually the approval letter from the lender, a photo ID, and a contract of sale if it's private treaty. If it's auction, it's just photo ID and proof of unconditional funds. If it's not unconditional funds and we're going to do an income and equity assessment, all we need in addition to that is a rates notice, so we can see that they have equity in property, and then mortgage statement and a payslip.
And what's the fees normally?
So for finance-backed, it's 1.3% of the deposit bond amount. So and
that's inbuilt or that has to be paid up front?
That's paid one-off fee up front. For any of the non-finance-backed or long-term bonds, that's through an application process, and the long-term bonds would be depending on the length and the amount required, so they will all be individual.
And another, I guess, myth to bust, so to speak, is we've had people ask where if they don't have enough of a deposit, is this service available? So this is So one thing to make really clear is it's not a lend. It's generally an IOU or an insurance policy to prove to the vendor that the purchaser has 100% funds to complete at settlement.
That's a safe part.
That's exactly right.
No problem.
Okay.
So, any other questions yet?
No, there you
I
go.
think we've covered
That's,
off most
that's
bases
pretty
here.
much everything. If there's any other questions anyone has, please do feel free to let us know. We'll have Louise with us for the next couple of minutes as well, so we can answer that for you.
Anything else you want to add, Louise? Any
Last
case
words?
studies, any more scenarios?
No, I think we've covered it off with buy and sell chain, first home buyers, and auction bonds.
Yeah.
But thank you so much for having myself and Deposit Assure on your cast today.
Absolutely,
Yeah.
no worries. So it's basically as long as you have the funds available, you are basically it's an IOU, as you've said. So you've got to prove that you've got the funds at settlement. It's not it's not providing funding. It's not providing a lend. It is just making sure that they're covering you.
Exactly. So the key is just to be able to prove where the funds to complete at settlement is going to be able to come from.
Come from equity or lender approval.
Lender approval. That makes it quite simple. There you go. There's a question here. Any changes possibly coming up? Is there any changes from a legislation point of view or from the actual service? Is there anything that's coming up?
Not at this point in time.
Yeah.
So at the moment, everything is working really smoothly and going well. We are seeing a higher volume of requesting for deposit bonds, and that's always going to be in line with the market.
Yeah.
So at the moment, everything is just as it is. So our turnaround times remain the same.
And the same, okay. And it's throughout Australia.
Yeah, Australia-wide, available Australia-wide.
Perfect. Cool. Any other questions? Do feel free to let us know. Otherwise, we'll see you guys next week. And if you do have anyone that you know that would be a valuable addition to our panel of experts, as we're calling them, please do feel free to reach out as well. We'd love to have more guest speakers bring to you different topics to talk about. Thank you very much, and we'll see you guys next week.